discuss market fundamentals. Jyotivardhan Jaipuria, founder and managing director of Valentis Advisors, is joining us now. Jyotivardhan, good morning. Thank you for joining in. Well, how are you looking at the markets currently? There's been a lot of volatility, 2 days of FI buying, then there's a big sell number. What's the mood now?
Yeah, so, the good thing is that we've had a correction. So at least valuations have become a little better than what they were earlier. From here, I think, we still will have some sort of more time correction than a price correction. We're entering December, of course, which is a seasonally strong month. So I think over the next few months, we'll probably be range bound in this range. And given that earnings are growing, we'll probably see, valuations becoming cheaper 3 months, 6 months down the road. And that will set the stage for the next run in the market.
Jyoti, hi, morning. What about the global setup? Lots of moving parts here. What is your base case?
Rima, I think the good thing is Trump will finally come in January. He's made a lot of announcements before, but with politicians, what they say before the elections may not turn out to be true after the elections. So in the worst case, I guess, there are two things we are looking at. One is that he's going to put tariffs all across the board. And there'll be tariffs on China, there'll be tariffs on, like he's announced, Mexico and Canada also, which in some sense is good for India indirectly because, it makes Indian goods cheaper relative to Chinese goods. But I think, there are two things you have to watch out there. Once he puts tariffs, then, there may be a lot of other countries starting to put tariffs. The second is, my guess is if he does this tariffs, China will go and devalue their currency to, offset the impact of the tariff. If that happens, then, every country in the emerging market space will probably have to devalue their currency, which is not great. You don't want a competitive devaluation across the board. The third is what this does for US is this whole inflation coming under control narrative may go away because the moment he puts tariffs, then, goods become more expensive, then inflation will start going up again. So to that extent, the view that next year we'll have Fed cutting rates and, rates are headed much lower may not work out to be true, which may, spook the market for some time. But my guess is we should wait till he comes because very often he says all this as a bargaining position. In the end, he may not do most of what he's talking about also.
But, Jyoti, and if we do get those tariffs on China, one impact, as you said, would be perhaps the yuan depreciates. Also, the risk is that what if China starts dumping all their excess capacity into India, and that will hurt the domestic growth if we do have that scenario also play out, that there's dumping from China because US as a market is not viable.
And dumping from China, we've seen what has happened in the chemicals industry. They have been lagging because of that. So there are a lot of moving parts that we've been talking about as well. So, you are saying there is some correction in valuations that has happened because the market's corrected from the top. But the fear that everyone has is there more to go? What has the conversation been like with companies for Q3? Because first half did see some impact on demand. Do you think now we'll see recovery, maybe some improvement in earnings?
Yeah, so Sonal, my views, we had 2 bad quarters. Probably the market ignored the June bad quarter because the markets were good at that time. It was ignoring all the bad news. And it hit us a lot in the September quarter because the market was going down also. So I think, somewhere we are close to a bottom of the earnings. Earnings will start to improve. There are 2 reasons I think earnings will improve. One is if you see the government capex and the government spending. In the first half, it's been very low, partly because of the model code of conduct and the elections which are weighing. I think second half, the spending will be much more. I think, for example, on capex, they'll do an average 1 lakh crores every month relative to, so which will be like up 50% relative to what they did in the first half. So that will help growth improve. The second is rural income will pick up because we had a good monsoon, good crops. The farmers will start getting this money by, the next month. And so that will start kicking into rural demand. So I think, maybe that impact will be felt more in the March quarter than in the December quarter. December quarter may be slightly better than what we saw in the September quarter. But I think the March quarter will be much better than what we've seen in the December quarter. I think we go back to a, close to 10% sort of earnings growth, and which I think FY26 again should be 10 to 11% sort of earnings growth. So I think from the low we've seen, we're probably going to see an improvement in earnings coming through.
Financials, has been attractive for a long time, but it's not given the returns. Tell us why one should still continue to keep the faith on financials.
So, it's valuation, Deepa. So for us, it is what
But it's been cheap for a while, right? And the whole market went up and it still didn't perform.
Yeah, so, there are problems there just now. There are two problems with the financials currently. One is the NIMs are under pressure, right? Because, you've seen basically a repricing of the deposits going up. The second problem which you have is basically, everybody's worried that, okay, the NPLs have more or less bottomed out and from here things can only get worse. We've seen some of that stress come in the MFI book, in the unsecured loan book. So going forward, two things will change. So one is, the NIMs will start to improve because already you started seeing deposit growths pick up. And, one key reason why deposit growth was under pressure was that the government was not spending. So, the reserve money growth in India has been very low. So as the government spends, you'll have, more reserve money, you'll have more liquidity in the system, and that will help to improve the deposit scenario. And so slowly, you'll start to see NIM stabilizing and starting to move up. Credit demand, just remember, is still decent. So it's not been like lagging. The other is the valuation. So, we have this classic 3Us, which we always look at when we buy stocks or sectors. And so just now it's undervalued. So banks are the only space where, on a 10-year basis, if you look at the valuation and look at them currently, current valuations are at a discount to a 10-year. So banks is, one of the only probably large sectors where this is happening. Second is it's underowned, and third is it's underperformed quite a bit. So, it may take time because if the rate cuts happen, then probably NIMs come under pressure very short term. So, but over the next 12, 18 months, this is one space where you'll make a lot of money and your risk on the downside is quite limited in the banks.
Okay, all right. We take that point. So keep an eye out on financials, the credit growth update going forward. That'll be very important to track. The sector hasn't done so well versus the other sectors that we have seen. But Jyotivardhan, thank you so much for joining in as always with your views on the markets and sector-specific queries as well. Well, that's all about markets, but it's time for another break. Tanvi Gupta Jain, the economist at UBS, will join in on the other side to discuss their India outlook, Trump 2.0 impact on India, and a lot more.